From the studios of Farm Journal Broadcast, this is AgDay.
Coming up today on AgDay, China back to buying from the U.S., and it's not soybeans.
In a 14-day period, they could eat the entire U.S. crop. So it's a unreal market.
So we'll be motivated, as is everybody else, to have a larger workforce working closer to 40 hours a week than a smaller workforce working 60 hours a week.
The new year brings changes to California's farm worker labor laws, and a new year brings a new Congress. We look into the challenges ahead.
AgDay, brought to you by the Chevy Silverado, the most dependable, longest-lasting full-size pickups on the road.
Good morning and Happy New Year. I'm Tyne Morgan in for Clinton Griffiths. Well, as lawmakers return to work this week, there are several key issues Congress must work through. That includes giving the okay for the new U.S.-Mexico-Canada agreement. The three countries signed the new trade pact late last year. Now the three nations must ratify the deal by having each of their legislative bodies approve it. President Trump already applying pressure to the now Democratic-controlled House, saying he's considering canceling the old trade agreement of NAFTA. He thinks that will force Democrats to sign off on USMCA as well as other issues. Hanging in limbo, ag groups say retaliatory measures from Canada and Mexico are still hurting the price of major U.S. ag goods, including pork.
What we have seen in international markets is the product is moving, so we're still moving product internationally, but what we've seen is two things. The product moves to different markets. For example, South Korea is a great bright spot. But then we've seen the price of product decline equivalent to the tariff. In other words, we move a lot of ham to Mexico and there's a 20% tariff. Guess what? The price of ham to Mexico dropped roughly about 20%.
Mexico hiked its tariff on pork to 20% in July. The ceasefire with China is another major ticket item looming for the White House. As the U.S. waits for more tariffs to be lifted, China says it will start importing U.S. rice for the first time ever. That's as leaders from the two countries prepare to meet in mid-January. The ceasefire between the U.S. and China started in December when President Donald Trump and Chinese President Xi Jinping met during the G20 in Argentina. The U.S. agreeing to not raise tariff levels if the two countries can come to an agreement on a host of issues, including trade. China announcing it plans to remove import and export tariffs this year on a range of goods, including alternative meats used in animal feed. And just last week, China announced it will be buying U.S. rice for the first time ever. It's not clear how much China will buy, but the U.S. rice industry calls China the 800-pound gorilla for the industry and a market barrier they've been trying to break for decades.
You know, China is a monster of a market. The facts are, based on the consumption rates of rice in China, that if, well, the short version is, in a 14-day period, they could eat the entire U.S. crop. So it's a unreal market.
Sullivan admits China will be a slow-growing market, so even with the country opening its doors, it will take a while for China's demand to ramp up. There are several regulations now in effect in California with the start of the new year, regulations which will impact farm workers when it comes to pay and hours. AgDay's national reporter Betsy Gibbon has the story.
California farms may look the same, yet they'll have to operate differently by law for the new year.
The greatest challenge we have in California as a dairy farmer is the regulatory overload that we've got and the cost involved with it.
Steve Maddox is a California dairy farmer. California farm workers will have a 40-hour work week, a reduction from 60, which means employees will receive overtime if they work more hours. The rule will apply to smaller ag businesses in 2022. In addition, minimum wage is increasing incrementally over the next few years. The pay increase will continue until the wage reaches $15. A coalition of nonprofit and labor organizations, along with healthcare professionals, praising the move. Maddox says he already pays 20 to 25% above minimum wage to stay competitive.
They're just upset. They said they weren't unhappy about the minimum wage increase because they knew I would keep them well above that. But that was an upset to them of decreasing their total pay for the month.
Some ag businesses working ahead of the timeline. The Wonderful Company announcing a minimum wage increase of $15 an hour in 2019 to its California employees. Others trying to figure out their next steps, like Ron Rado, a produce grower in California.
In every industry, people like to control their overtime costs, which poses an ugly dynamic between the farmer and the workforce, where the farmer will be motivated to reduce hours, and the employee really doesn't want to reduce earnings.
For Rado and Maddox, that may mean more employees, fewer hours, or more technology.
So we'll be motivated, as everybody else, to have a larger workforce working closer to 40 hours a week than a smaller workforce working 60 hours a week.
The minimum wage is going to be $15 in 3 years. Time and a half would be $22, $22.50 or more. That's pretty pricey. You can almost pay for your robots with that.
The state's ag industry working at restructuring business models while hoping the change does not suck out profits for them and their employees. Reporting for AgDay, I'm Betsy Gibbett.
Thanks, Betsy. Nearly 24 states will receive higher minimum wages this year, and they could impact 17 million workers. Well, swine fever continuing to be a problem in China, and now Japanese officials think they know how it ended up in their country. The Asian Review reporting experts believe the initial outbreak was triggered by a traveler who brought contaminated pork products into the country. Then the leftovers were thrown away and eaten by a wild boar. Japan's first case of swine fever in 26 years was confirmed at a hog farm in September. And just last week, a 6th case of classical swine fever was identified in the country. Japan was forced to dispose of more than 7,000 pigs. So far, African swine fever has not made it into the country. The symptoms of ASF are nearly identical to those of classical swine fever, but the two diseases are caused by different viruses. A co-inventor of CRISPR-Cas9 genome editing technology thinks the first food crops resulting from genome editing could hit the market this year. CRISPR genome editing is a group of technologies that allow scientists to change an organism's DNA. CRISPR-Cas9 actually allows scientists to do that faster, cheaper, and more accurately. Scientists say gene editing is different from genetically modified organisms as it's more reliable. However, it's still unknown if consumers will have the same negative reaction to gene editing as they've had to GMOs. In 2018, a top EU court ruled that gene editing crops are too similar to GMOs and now face the same stringent legal challenges. And that's something that could impact any type of trade agreement with the EU in the future.
Their decision has basically been to treat gene-edited crops the same as genetically engineered crops. And so, I think the precedent sets is one where there's going to be less innovation in the European Union, and again, it's going to be more difficult for us to adopt traits if we want to trade with the European Union, and I think that's going to be a real challenge.
Lusk thinks the EU will continue its tough stance on technology advances like genome editing until something is introduced that EU consumers see as a benefit to them. Well, it looked like a lot of people had fun over the holidays in farm country. Meteorologist Mike Hoffman has more in today's Crop Comments.
Thanks, Tyne. Lots of you sharing your holiday greetings on Twitter. This one comes to us from Allison Howie in North Carolina, welcoming in the new year with a new little friend. Allison says she loves having little visitors on the farm, especially when they leave with dreams of farming one day too. We'll have your forecast coming up, but first here are a few hometown temps.
Plan for the unexpected with weather forecast updates. Local forecasts are delivered right to your cell phone each morning, making planning a little bit easier. Just text Weather 6 to 31313 to get started.
2018 was quite a year for livestock prices, what one analyst says we should be watching for this year. And later, putting Harvest 2018 in the books, the highs and the lows in one farming state in the country. Livestock prices were on a wild ride in 2018, with volatility being the name of the game. So what's in store for 2019? Clinton Griffith sits down with John Payne for this morning's analysis.
Here at the Agribusiness Desk today, we have John Payne, publisher of This Week in Grain and Oilseeds. John, as we look at this livestock market, we've kind of got two worlds. We're watching cattle, we're watching hogs. Both of them have been pretty dynamic as of late.
Yeah, cattle markets specifically, I think on the fat side is really leading it higher, and that's where I think the break into the kind of recent softness we've had in the feeder cattle market was surprising. That you have the packer that's really making money hand over fist, whether they want to admit it or not. We've got prices at the counter are almost as high as they were back in 2015, 2016, and the future is almost 20–30% cheaper. So in my opinion, I think the markets are very structured to go higher here. The demand is there. I don't think there's any rationing going on at all. And numbers, I think, are going to come down. The recent softness, I think, was partially due to banking, and I think bankers are tightening the purse strings and not allowing these guys to go out and buy as many calves as they have been, and really trying to cut down on the amount of risk they have. So I think that'll come around to bite everybody in the rear in the long run. So maybe this summer we do see a push up, late spring into the 130s on that fat price. I wouldn't rule that out at this point.
Yeah, the other thing we're watching are hogs and lean hogs, given that turmoil and the stuff going on with China, and they're dealing with their own outbreak of African swine fever.
Right.
So where do we sit with that market?
Well, I do a fair amount of trading on the hog side, and I think the biggest misnomer everybody had was when they saw the swine flu. It was like, oh, it's like mad cow. We need to buy it, and everything's going to explode. But it was the opposite. We saw China essentially dial back demand. They're not importing any U.S. products, so essentially we have a lot of U.S. supply that's available. We want to essentially give it away to them right now to help, one, limit our supplies that we're seeing in the hog report that just came out, and then just the amount of demand that China usually has needs to be replaced. And I think there was about a lot of money that got in and bet on that price going higher. And now as we've gone into the end of the year, macro weakness, you're seeing that taken down. I don't think Feb has much of a life below 60, though, at least in the short term. The cash is about $10 under basis or under futures, which is not normal for this time of the year.
Sure.
So again, I'm a livestock bull in 2019. I think we're seeing limiting numbers. We'll get the pig numbers figured out, but short term here, it's kind of a stock market trade, and I think they're getting washed in with that.
Okay, appreciate it. Thanks for the insights, John. We'll be back with more Ag Day in just a minute.
To find John's newsletter, This Week in Grain and Oilseeds, head over to www.thisweekingrain.com.
Welcome back to Ag Day on the second day of January of 2019. Can you believe it? Well, we're looking at drought monitor still with some issues in the Four Corner region, Oregon, Southern California. Elsewhere, not so much. The issues this fall have been wet conditions in the eastern portions of the country. We do see a change in the weather pattern coming up, though, and we'll just go right to the jet stream to show it to you. Our first shot of colder, more Arctic-like air coming into the Great Lakes. It's already into that area. It's moving into the northeast as well. It's going to be a quick shot. Then we kind of go probably closer to normal as we head through the rest of this week. There's Saturday, still kind of, colder than normal air coming into the northern plains, the Great Lakes in the northeast, but staying on the mild side through the Southland. I do expect the overall pattern to be this big trough digs in and stays in the east most of the time for a good 6 to 8 week period here during mid-January on, and a big ridge out west. But we'll wait and see for sure. Temperatures over the next 7 days, we're going to flip-flop what we've seen over the past 3 weeks, and that is below normal Mississippi Valley eastward, and then above normal Montana down to the Four Corner region westward, kind of opposite of what we've seen. Precipitation over the next 7 days. Gulf Coast, East Coast, I'm expecting above normal. Near normal for the Great Lakes, down into Texas and New Mexico, below normal for much of the west, as you can see there. All right, let's go for the 90-day outlook. We'll split up the months on the temperatures. January temperatures, I'm expecting it to be colder than normal, perhaps substantially so for the second half of the month for most of the eastern two-thirds of the country. Northern plains will go near normal. You'll go back and forth a little bit. Montana, West Coast above normal. February, not a big change. I just altered these areas a little bit, but overall it's still below normal in the eastern two-thirds of the country, above normal in the west. March temperatures then will start to expand that above normal area across the northern plains into the Great Lakes, still below normal in the Gulf Coast and East Coast areas. As far as precipitation over the next 90 days, below normal for the western Great Lakes, northern Mississippi Valley, above normal for a lot of the southern states, and then below normal for the Pacific Northwest. That's a look across the country. Now let's take a look at some local forecasts. We'll head to Sacramento, California. First of all, lots of sunshine and cool today, high of 59 degrees. St. Louis, Missouri, partly sunny, rather cold with a high of 33. And finally, Miami, Florida, a good deal of sunshine and warm, high around 80.
Hey, stay tuned, folks. Coming up, I'll tell you about the hottest seller on our Machine Repeat online auction last week.
Keeping track of the shifting market prices has never been so easy. Get the latest commodity prices sent directly to your cell phone with market updates. Just text Markets 8 to 31313 to get started.
We've been telling you about this, a big year-end dealer auction involving Machinery Pete. What were the hottest items? Well, Machinery Pete shows us, and what it could mean for the future of used equipment.
Well, folks, a big thank you for supporting our Machinery Pete year-end online dealer auction that ended last Thursday, a sale we did with our friends at BigIron.com. Now, as I looked at the equipment list on the sale, there was one item that stood out as what I thought was the strongest seller on the sale. And here's a picture of it. A 2016 John Deere 6155R, 155 horse, IVT, had 531 hours on it, came from central Minnesota, sold with the John Deere 640R loader with an 8-foot bucket. Now, as we watched the online bidding the 3 weeks that it was open online, this thing had almost 300 bids on it. It wound up selling for $123,501. Now, as I compare that to our Machinery Pete auction price data over the last few years, guess what? Highest auction price ever on a 6155R right there. Now, of course, it did sell with a loader. Now, the previous high auction price we'd seen on a 6155R sold with a loader was this one. Came back August 26th of 2016, way out northwest Nebraska. Was a 2015 model, 381 hours on it, same exact setup, IVT, selling with a 640R loader, 8-foot bucket, and that brought $115,000. Now, if we analyze this, at that time, that tractor selling in August of 16, that 15 model, was about a year and a half old. Now, compare that to our Machinery Pete online auction last Thursday of the 16 model, selling December 18, almost 3 years old, with 150 more hours on it, yet it sold for $8,501 more. Now, I think, folks, this is a pretty good sign year-end 18 of the buyer demand for really good condition tractors.
Thanks, Greg. Well, what was the 2018 harvest like for you? That's a complicated answer, right? Well, we'll look at the results in one ag state next.
Is now the best time to sell your old equipment? Pete's Pick of the Week keeps you up to date on current market prices, making it easy for you to know when to sell your equipment for the best possible price. Text Pete6 to 31313 to get started.
Louisiana agriculture had its fair share of ups and downs during 2018. Yields were up for some commodities and down for others. And it was the same story for commodity prices. LSU Ag Center reporter Craig Gautreaux has this report concerning the 2018 crop year for Louisiana.
It was a topsy-turvy year for Louisiana agriculture in 2018. Some commodities saw yield increases and some saw declines. Prices trended up for some crops but were lower for others. The hardest hit, soybeans. Bad weather at harvest caused many acres to rot in the field, and a tariff spat between the United States and China led to a decline in prices and took away the #1 export market. Experts believe there will be fewer soybean acres across the U.S., including Louisiana, next year.
I think you're going to see some of those bean acres transition into corn and to a lesser extent maybe cotton. Again, the amount of those acres that go into cotton are going to be limited by the infrastructure capacity of the industry there.
Corn acres were down in Louisiana and so were the yields. The state averaged 170 bushels per acre, 14 bushels lower than last year. Corn prices averaged $3.60 per bushel, 25 cents higher than last year. Projections are for higher corn prices, which could lead to more acres in 2019.
Market observers suggest a window of $4 to $4.25. That's going to be a range producers should keep their eye on. I think that's the price point where acres can be bought back in.
Both cotton and rice in Louisiana saw higher yields, but a strong production year for rice in the U.S. led to lower prices, while cotton prices increased slightly. The Louisiana sugarcane crop looks to be in good shape. While sugar recovery is down from a record of 246 pounds per ton, the total tonnage of the crop is expected to exceed last year's tonnage.
This year we're about 225. That's more in line with the 10-15 year long-term average of that. NASS forecasts the sugarcane yield per acre to be up almost 2 tons an acre, so if that comes to fruition, if that holds, we could see a really good sugar crop this year.
There could be a glimmer of hope to the ongoing trade feud between the U.S. and China, which will greatly influence the soybean market. Another pressure on soybean prices is that U.S. stocks are near 1 billion bushels, which is nearly twice as much as 2017. With the LSU Ag Center, this is Craig Gautreaux reporting.
Thanks, Craig. Yeah, challenging year for many. Well, that's all the time we have this morning. We're so glad you tuned in. For all of us at AgDay, I'm Tyne Morgan. Have a great day in farm country.